Hi, everyone. It's Kali Arevalo, editor of Institutional Investing in Infrastructure, here today with Des Fullam, the Chief Regulatory and Client Solutions Officer at Carne Group. We're just going to talk about the increasing participation in the infrastructure asset class by retail investors. First of all, Des, thank you so much for joining me on this topic. Do you want to just add a little bit of color about your role at Carn Group, what you do there?
Thanks, Callie. It's a pleasure to discuss this topic with you. So I lead the client solutions team at Carne Group, and at Carne we support about $450 billion in assets. Over the last number of years, we've helped 50 different firms set up semi-liquid funds targeting high net worth and retail investors in the European market. So we can really see a strong interest in the infrastructure asset class. And it's really been my job here to spend a lot of time working with those managers on advising them on the right structure and the right location for their funds.
Fantastic. Thank you for just giving a little bit of background. So it was noted in your recent market report series, and we've been hearing a lot about it as well, actually, but there's been this rising interest from retail investors in infrastructure. I'm just curious what you're seeing is what's driving the shift and how significant could retail capital be or become for the sector?
I think it can be very significant. So I suppose what we've seen is on the supply side, our survey said that more than 70% of infrastructure managers are expecting an increase in fundraising from retail investors, and we're seeing that play out on the ground in terms of people looking at launching more funds in this area. I think what's really attracted the attention of retail investors is the role of infrastructure managers in financing the economy of tomorrow, whether that's helping build data centers, helping build the power network to support that, whether that's financing a lower carbon economy. They're all themes that I think really resonate with investors, and I think they want to participate in that change. And I think also the returns that have been generated by infrastructure managers, have been consistent, and they build in some inflation proofing, which I think is attractive to savers in Europe.
Yeah, that's definitely something to keep an eye on. So, Des, how are regulatory changes, government initiatives, and new fund structures sort of opening up the asset class to retail investors? And how are you seeing managers adopting their strategies as a result of that?
So we've seen a number of initiatives. So in Europe, we like our acronyms. So we have what's called a European Long-Term Investment Fund, which is called an LTIF for short, and that was completely remodeled a couple of years ago to make it more attractive, really to finance investment in the European economy, but also to finance investment in the global economy as well. So what that did was it allowed a lot more flexibility in terms of the types of assets funds could invest in and LTIF could invest in. It broadened out the geography of where funds could be invested very much outside Europe. So these funds might be domiciled in Europe, but they can invest on a global basis. And I think it's part of European governments thinking that um, as as they have very significant financial needs, they need the support of private markets to help deliver the infrastructure change that's necessary. And if they can get European investors to support that, that kind of joins up both the supply and the demand equation. And if you look at the UK government has been even more explicit. So they have set up what they call an LTAF, which is a long-term asset fund. Initially, that's focused very much at defined contribution pension schemes, and a number of large pension schemes in the UK have committed to allocating at least 10% of their assets to private assets. And the UK government has asked those entities to really invest half of that money in the UK economy. So really, they're pushing that private investment to finance infrastructure spend and infrastructure change in the UK. So they've been very explicit about the rationale for that change.
Do you think the growing role of retail investors could change the way infrastructure funds are structured, managed, or distributed over the next few years, or what are your thoughts on that?
I think they certainly will. So I suppose with as retail investors look to access this asset class, I suppose they do so in a different manner to institutional investors. So the traditional drawdown vehicle doesn't really work for retail and high net worth investors, but they do, as I mentioned earlier, they do really like the idea of the steady income flow that infrastructure assets can generate. So the fund structures, I suppose, need to both cater for providing some liquidity to allow investors to come in and exit the funds, but at the same time bearing in mind that the assets themselves that the fund is invested in aren't always liquid. So what we're seeing in the market is that people are potentially looking at building in liquidity sleeves. They're maybe having initial lockup periods, so investors can invest into the fund maybe on a monthly or quarterly basis, but they can't withdraw funds for a number of years. And then on an ongoing basis, the funds might have fund level restrictions as to how much capital can be withdrawn in any one year. So you do get access, retail investors do get access to an asset class that they couldn't otherwise access. But, they have to be mindful that it isn't a liquid asset class like traditional bond or equity funds, but it does provide a limited amount of liquidity. And over time, they get I suppose, the benefit of some of the illiquidity premium that comes with investing in private assets, but with an element of liquidity spread out over a number of years.
Perfect. Thank you for touching on that. Was there anything else you wanted to add that you maybe covered in the report in regards to this, or just your own thoughts?
you know, Infrastructure has been an asset class that has generated strong returns over the last number of years. And I think we see it as an asset class that's going to continue to grow, and that's really borne out by our report and indeed other reports. And I think, the appetite of or the scale of change that's happening in the world at the moment really does need private sector capital to deliver that, and infrastructure managers are right at the heart of that. And I think what you can see in terms of things like corporate activity, so some consolidation in the sector or new firms trying to get into infrastructure asset management, really shows that people are very excited about the sector, and I think the outlook for growth is very positive here.